The more important thing is probably the domestic stimulus policy over the sort of uncertainty you're concerned about, whether it's geopolitical developments or things like additional tariff. I think partly it's because the tariff, we've seen this before.
Yep.
There's a playbook for it. And we know exactly how corporates have been responding, right? So that's, maybe peel that back a little bit. On a tariff side, very clearly the listed company, the more well-resourced, better balance sheet, larger scale manufacturers, be it TV assembly companies or home appliances or other sort of hand tools, etc., have spent the last 6 years building factories in Vietnam, in Mexico. And so they are probably not going to be immediately impacted by tariff. Having said that, the smaller private companies weren't able or didn't have the resource to do that will be impacted. And so you will see when the tariffs do come, and I think there's a high probability that I think almost certainly tariff will increase from here. And I do think that from sort of the smaller enterprise, private enterprise part of the equation, you will see hit on jobs, you will see hit on economic output.
Yeah.
And so really it's about how much stimulus that the government provides to counter that.
Right, I've got it. And, you can take China, I suppose you can take the factory and put it somewhere else, but you can't take China out of the supply chain, is basically what you're saying. So there is sort of an equity playbook as far as some of those companies and how, able they are to do that and sort of circumvent some of those tariffs. But, okay, let's switch to the domestic situation. Do you believe that what they've got up their sleeve is going to be enough to sort of offset the potential damage that the more tariffs could bring to the economy?
I think there are certainly enough tools now the government can do. And you already mentioned a little earlier, I think there are perhaps some measures that are kept up their sleeves and waiting to be released in case of more adverse developments. I think, again, if you rewind the playbook back to 2018, the impact of the tariff were mitigated by partially renminbi depreciation. That took some of the brunt away, and it was mitigated by other stimulus policies. Now, if you look at this round, from our point of view, this more measured release of policies instead of one big giant bazooka is actually a good thing, because particularly from a point of view of the market, of course, the fast money has been disappointed because they were looking for. It almost seems like every passing week, the press articles are a higher number, right? We started with 6 trillion, it ended up with 10 trillion. By the time the NPC Standing Committee came about, well north of 10 trillion. And so I think the reality is probably had a hard time keeping up with that sort of elevated expectation. Having said that, I think this sort of measured release of policies, particularly the debt swap that's being announced, were very good from our point of view. Yep. It's very crucial, and it addresses exactly the economic pain point that's most immediate right now. Of course, there should be other measures coming down the road, whether it's direct assistance to the consumers or more forceful, impactful policies on the property side, and those are probably going to come sometime in the future.